yes, we are certainly seeing the impact of a large volume of steel flying out of China into the Southeast Asian markets, and what that's done is that's driven pressure on price, which then comes back to our domestic market here in Australia. So for the last 6 months or so, we've seen strong production levels, even though the Chinese economy's been soft. So there's also been pressure on raw material costs. So in some ways, we've seen it both on a sell price and a raw material cost front. There's no question that that softening of the Chinese market is certainly having an impact in the Southeast Asian market.
What has been the impact on prices, say, compared to the boom time of the latest cycle?
Well, I would definitely call it where we're at right now is what we would say bottom of the cycle. So as we think about the cycle, and the steel industry is a cyclical industry, and we've been around and seen many of these cycles, and one of the things that gives me confidence that we'll work our way through this as well, as we know how to react in the bottom of the cycle conditions. But there's no question that from our perspective, and in terms of thinking about Southeast Asian spreads, the difference between sell price and raw material costs, we're seeing that number of around $200 a tonne or below. That's very much from our perspective looking at the historical spread levels at the bottom of the cycle.
They're at $200 now. What were they?
Oh, look, if you thought about a mid-cycle number of around $300 a tonne, that's the sort of differential that we see where we're at now at the bottom of the cycle at less than $200 a tonne.
You say this is a cyclical issue. What do you say to those who believe China's property bubble poses long-term structural challenges for Australia's steel sector and iron ore industry?
Look, I think what we've seen in the past is when we're at the bottom of the cycle is there's either been a supply side adjustment, because at these levels steelmakers in China are losing money, or there's been a correction or an incentive or a stimulus that's driven a demand side adjustment. So that's historically what plays out when you get to the bottom of the cycle. This has been extended for longer than we typically would have seen in the past. I think that's partly reflective of how soft the Chinese economy is generally. Employment has become an issue. But at these bottom of the cycle spreads, steel companies, particularly some of the less efficient steel companies, would be losing money, and you can't do that forever. So they're the sorts of adjustments that need to be made. And does that mean a structural adjustment to production levels and capacity in China to meet their domestic demand? I suspect that's what we'll start to see.
Are you concerned that the right conditions are present for steel dumping in certain markets?
Yeah, look, that's something we watch very closely. We've worked with both sides of government to ensure that there's an appropriate regime in place to ensure that we don't suffer from unfair trade or dump steel. So that's certainly something that we keep an eye on. We're not subsidised in Australia. We incur all of the costs that we need to incur to ensure that our facilities are safe and environmentally appropriate. And that comes with a level of cost that you would not want to see that undermined by unfairly dumped material coming into Australia.
Have you seen any evidence of dumping in the most recent past in Asian markets?
We watch that all the time, so we monitor that closely. We set our pricing for our products in Australia based on an import parity price. So monthly we're getting updates about what's happening with pricing and volumes coming into the country, and where we think we need to take action, then we engage with the Anti-Dumping Commission and put the process in place.
What are the implications for further falls in the price of iron ore, given it is down by close to 30% since the start of the year?
Well, I think the implications are really very much an Australian perspective. The last thing we'd want to see is an impact on the Australian balance sheet. Iron ore is such a critical mineral for us. So certainly I note the Treasurer this morning was talking about the impact of the fall in iron ore pricing and its impact on the deficit. So that's something that obviously the federal government will be watching very closely. For us, some of that pressure coming out of raw material costs helps when sell prices of steel are under pressure. So that goes some way to assisting us from a spread perspective.
You talked about the challenges at the bottom end of the cycle. Do Bluescope's US operations help to offset problems in the Asian markets?
I think one of the great strengths of Bluescope is our diversified portfolio. We've taken decades to build a strong business in Asia, India and China, and more recently we've invested a large amount of money in the North American market. I think one of the real strengths of the Bluescope portfolio is the fact that we have that geographical diversity. yes, there are bottom of the cycle conditions globally right at the moment, but we had a stronger period in North America based on the local demand there and have expanded our capacity at our North Star mini mills. So I think managing a diversified geographical portfolio helps in these times where some markets are more adversely affected than others.
There have been some concerns expressed from some economists that the US could be staring down the barrel of a recession. Do you see any signs of that much contraction in the economy?
There was lots of talk a year or so ago about a US recession, and that didn't come to pass. What we have seen in the last few months is more softening in the US than we'd expected. I think there's some uncertainty, perhaps driven by the fact that we're coming close to a US election. There's always volatility and uncertainty in any market when there's a federal election that occurs. So I think we're seeing some of that play out. But I look at the North American market, I think about the scale of that market, I think about the IRA, the spend that's occurring on renewables, the spend that's got to occur on infrastructure. All of those spends, that stimulus, that investment is steel intensive. So when I think about the US market and look at our investments and our expansion in North America, I'm really confident in the medium and long term in the US market.
Now, Bluescope has cited weaker conditions in the domestic housing construction market. Can you explain why commencements are slow, given the incredible pent-up demand for housing?
Look, I think there's a few things at play there. Certainly, we've come through a period where demand far outstrips supply. The supply chain was very tight given the post-COVID stimulus with home builder and the like, and that's taken us some time to get through that. I think stronger interest rates have clearly been an impediment for housing starts, but there's also more structural issues like land release, planning, etc., and the costs of land release that we need to work our way through. So I'm certain governments, state and federal, you see from the pronouncements, there's lots of focus on this area. We have strong net migration coming back into Australia. We have a serious housing shortage. So again, my medium and long-term outlook for residential housing in Australia, and as a result of that, ColourBond and TrueCore sales is really quite positive. I would expect to see it bounce back not too far into the future.
We haven't yet touched on rising energy costs. They are a huge input for your business, presumably also a challenge when it comes to the company's decarbonisation journey.
Yeah, there's no doubt. We have an immediate issue around energy costs that we need to deal with. We're seeing our energy costs increase by $50 million in FY25 over FY24. And that's a serious challenge for the business, and we need to work out how to mitigate that. But there's also the longer term issue. As we think about decarbonisation, the transition, there's going to be a need for more gas in Australia in particular. There's going to be a need for affordable, emissions efficient energy, and it needs to be dispatchable for industries like ours. We need energy 24/7, not just when the sun shines or when the wind blows. So I think there's a broader cooperation that's going to be required between governments and companies and, quite frankly, communities in terms of how we deal with the energy challenge to transition to a lower emissions future.
Mark Vassella, good to speak to you.
Thank you.